Good morning, everyone. This is daily trading analysis with the weekly recap for this week, in which we had a lot of economic data and we were going up, 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 up. And finally, on Friday, NFP took a bit hit on the markets, and basically, we ended the week when we started. So we are going to review, as always, from the economic data to the technical analysis from top to bottom of the equities of the individual Magnificen-7 stocks, and also going through dollar, yields, and overall breadth to show you why you have to be really careful right now, because we crossed all-time highs and we rejected. We couldn't hold, but we couldn't break down either. So we are still there consolidated, and we have to really pay attention to the price action to really know how the big investors, how the big players are playing this game card of all-time highs, because this looks different than the last time that we crossed all-time highs. But the fundamental analysis, it's also not too optimistic. So pretty difficult situation. So if you were struggling this week to really find opportunities, or you were negative, don't worry, because we are all in the same boat. We are all struggling to find proper setups in this choppy and volatile market. We are going to start with economic data, and the start of the week, Monday, Tuesday, and Wednesday, was pretty good. We started with manufacturing data on both S&P Global and ISM, and as you can see, we got manufacturing going higher, ISM manufacturing PMI a little bit lower, and employment going up. So this is a good step in the right direction. So we started to climb up the weekly with pretty good optimism. On Tuesday, we got jolts, big number, because basically we decreased the number of job openings from 8.3 to 8.06, and the ratio of job openings per people was to 1.1.2, and it's pretty nice because that's a good ratio to have a pretty decent and strong labor market, but also comes back down and slow down, and that's what the Fed is looking for. Factory orders showing 0.7, so the same kind of strength in demand. And optimism index came still at around 40, which is basically what the previous one was showing. A little bit of lackluster. This is maybe a miss, because we were expecting 45 on the optimism. On Wednesday, we started to see really big data. ADP employment change came lower than expected. This is a check in the right direction. Employment going lower is good for the markets and good for the Feds. And S&P Global Composite and Services came really strong. Look at this, 54 instead of the 51 on the previous one, and exactly as expected. And not only that, ISM services, remember, services is the sticky part of inflation, came really higher. And you may think that services going higher, it's a miss. But no, this is a hit in the right direction, because right now, at that point in time in the week, we are thinking about possible stagflation, and we are trying to avoid recession. So we want the manufacturing, we want services to start climbing, and at the same time, the hottest part of the economy, the housing and labor, we need to cool down. And this is the perfect storm. We have ADP employment change going lower, composite services and ISM going higher. And this is the perfect scenario for the markets to really rip up. And this is what happens. On Wednesday, we crossed all-time highs in a really, really bullish day. Thursday, nothing. So market consolidated. And on Friday, basically, we were watching non-farm payrolls and unemployment rate. And this is the big one. This is what killed the market and is establishing a lot of concerns in terms of the strength of the economy. Because look at this, NFP non-farm payrolls 272,000 coming from the 165,000, and we were expecting a little increase. So this is a big hit for labor market. So basically this is a miss. And look at this, unemployment rate from 3.9, we were expecting flat, and we are crossing 4%. That's a really psychological level for the unemployment rate. This is also a miss. And also really important, look at this, average hourly earnings year over year, 4.1. We were expecting a decrease. So Friday was a big miss. But Fridays are dangerous. And what we did is basically tanked, grab liquidity, stop everyone up but one tick, and then dump again. So we ended the week with a pretty volatile Friday and with the concerns about what is Friday showing and how is that is affecting the markets and affecting the interest rate path cut. So basically we moved from September cut to no cut. And November and December, it's really showing indecision. So for now, it's one cut again, if any, because right here you can see that the probabilities are not good and we are coming off a big number like the non-farm payrolls, which is really, really strong. So we are still seeing pretty big data. In terms of open interest, on Friday, we really saw balance on the Nasdaq, but on the S&P, I would like to show you something really interesting because on Wednesday, look at this. We push 43,000 on open interest on the big spike to all-time highs. All these longs were added to the market. On Thursday, we really saw a little bit of decrease and they keep adding to the next contract on September. So they are waiting and they are looking for continuation. But look at Friday. Friday, we dropped a lot and we moved later. So this is a strategy in which the current contract sees a decrease, and then for the next contract, they are still trying to look forward to, in this case, 5,400. So really interesting because there's positions that are being killed, are being liquidated and closed, but they are still bullish long term. And that's exactly my perspective right now. Because if we go to the charts, this is the weekly on the Nasdaq, we can see that we got 2.4% and we are still holding pretty good levels, right? Last week and this week are still bullish. We are still in a bullish trend, trying to find some kind of push out of that. So in the daily, we can see what I told you. We can see that Monday, Tuesday, the big Wednesday, consolidation Thursday, and the indecision on Friday. And this indecision is still holding a fair value gap and still holding critical levels. So quite a miss on Friday, quite an expected push to the upside and also to the downside. Because if we go to, let's go to the 1 minute without any kind of indicator, any kind of drawing, you can see the NFP, big trap, big move higher from consolidation since the open, and a drop of 170 points. And then slowly building up until we just stopped out all these shorts and then dumped heavily and ended up right here down close to 19,000 in the negative. We closed all in the negative. But look at this, Apple is 1.24%. And I think that's one of the reasons why we never broke down, because Apple is holding this market right now. It's not Nvidia, it's not Microsoft, it's Apple. Why? Because we have the developer conference. The WWDC, it's everyone is betting on iPhones able to run AI. Apple Intelligence is going to be the center, the focus of that event. And everyone, investors, day traders, are really preparing for that. So Apple holding this market, it's quite interesting, right? Because we never got to see that in last times. And let me just show you how we squeezed on Wednesday, we consolidating on Thursday, and Friday was really difficult because during the overnight we never either cross liquidity higher. I was waiting for these guys to be stopped. All this liquidity was really the primary target for the NFP, and that's what they did. And the question, my question was, are we going to hold any key data? I was watching this pivot and this last weekly high at 18,980. And once I saw the big dump, the big squeeze to the downside, and we were starting to reclaim, look at this, starting to reclaim this level of last week high with a fair value gap, I was really interested in seeing, are we really going to slowly grind higher? And that's what we did. At the open, this zone here, that was basically when you have this big candle, everyone's trying to short with 50 retracements. When you have a 50 retracement from this high to this low of the body, you can see that the golden pocket, it's right here, and people were shorting that on the first move. But look at all these weeks. All these weeks we're saying longs are still viable. And that's what they did. They push higher, and basically, let me just get that. We did the same on the week of that candle. At the 50%, they tapped short and we build again. Momentum to the downside, but at these 30s, again, these buyers were coming in. And we ended up basically tapping the high of day and then rejecting hard on the first move, consolidation, and then the latest move into the power hour, into the close, to close really in the negative. And that's the sentiment right now. On the daily, we can see that we are, let me just clean this a little bit. We took all these, we made a new all-time highs overnight, and that's what we did. We tapped that all-time highs to be in regular market hours, and that's really important for big investors. So basically, this was tapped. Let me just remove that, and all these to really see the daily, because the daily is still pretty interesting. We are in this candle indecision, but we are holding last week high, and we are holding the big volume that I always try to explain you. This point of control on the daily, when we are above and we are setting up, look at this push, consolidation, and I wouldn't discard a move higher, even though Friday's economic data was really bad, because Friday's volume, it's still pretty high. Look at this, 19,090 has volume. If we slowly build higher, I mean, even though the fundamental analysis it's pretty bad, and we are going to see that on dollar and yields also, the fundamental part, it's really tricky. But the volume and the price action is showing you that there's people willing to push this market higher. That's how you have to read this. Sometimes technical analysis goes beyond fundamental analysis, and we have to really trade what we see, the price action that we see. Let me just review the Magnificen-7, the individual tech stocks, because this is what Apple did. Look at this, really bullish day, choppy but bullish, 1.24, when the entire market is red, shows you something. And I think Apple's willing to push all-time highs at the developers conference for sure. I think 200 is on the table on AI FOMO. Microsoft, nothing. We are still trying to break this huge range of 425 to 400. Tesla in the red, also in the middle of anything, 170 to 180. Amazon, we pushed the entire week and we just reclaimed the two moving averages. So we are progressing. But as you can see, I don't see, let me just put this. I don't see a strong push. I would like to see Amazon above 186. Google pretty deep and pretty clear that we don't want to push all-time highs. We were so close, but then Google was pretty bad at the open, at the close. Nvidia, the big one, we are still holding. So you never know with Nvidia, but 1,200 was reclaimed and we are closing above that. So if we check the 1 minute, we can see that we started seeing a lot of choppiness. We tried to go higher and overall we tried, but we are still below that previous all-time highs, which I don't feel confident because Nvidia is pushing AI, but Apple also. So Meta it's holding the gap on news, but it's below 510, which is my level that I think once we cross, we can pull back and really see a push to all-time highs. So really weak for the Nasdaq, and we are consolidating after a push, but the individual tech stocks are also finishing in the red. So that's a wild card. We need to take a step back to really see what is happening in other markets. And one of the markets that really got a huge boost was dollar. Look at this candle on the NFP and then the drift higher. So this is a strong close for the dollar. And I was watching this descending pattern into a breakdown, but the NFP got rid of any kind of setup to the downside. And basically we took a lot of liquidity up here and we were closing at the highs. And the daily says everything. This huge green candle. You don't usually see these kind of things unless you go back to April. So dollar is pretty strong. We still have this huge zone of demand of supply at 105.40 and 50. But yields are also pushing higher. Look at this. This is one of a heck, 3%, 3.45 on the 2-year yield, pushing higher. And we are right below 4.9 again. And the 10-year, it's at 4.43, pushing 4.5% with a 3.40% only on Friday. I mean, the pattern is lower, but this kind of pushes, obviously treasuries are, look at this move down 1.83. And the small caps are also suffering, 1.17 in the red, really moving below this support that we had, the attempting to reclaim and push all-time highs. But this gap is quite interesting. If we go below this gap, I think we might see a rotation lower for small caps because they are really affected by the interest rate path. And after the NFP reading, we are going to see a lot of struggling of small caps. And what about breadth? Well, breadth decreased also a lot. We are still in this pattern of coiling pattern, which obviously, I think honestly, it can go both ways. It depends on how we are doing that. And after the push lower, I've been saying all week that we are not seeing breadth following up. Look at this. These readings in all this is momentum to the downside. And on Friday, we got minus 16% of stocks above the 20 moving average. We are now at 30% of stocks. So clearly momentum is to the downside in all three readings. And overall, RSP is just coiling big time, and let's see what happens. But breadth is not following the big momentum in tech stocks. And finally, one thing that I think is the consequence of a big miss on NFP, and I think you have to be really informed about this. It's what is happening with gold, copper, silver, and overall metals. Gold took a big hit, 2.76% on Friday. It was only selling and selling and selling and selling. As you can see, I started analyzing to try to find some coil to trade gold, but I mean, this is weakness, extreme weakness overall. This is a huge move down for gold. We started with news like, let me just show you. We started the day with news about China pausing the buying. So basically, the Bank of China paused its 18 month in a row buying gold like crazy. So this started as pre of downside, and this is the downside that I'm showing you. This downside was before the open, during the overnight. It started when London opened, and we saw just look at this. It's just sell, 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 sell. Not a single candle above the 45 EMA. And then when we were basically, I was trying to see consolidation here to take the liquidity at 2300 to really see this, to buy gold. And look at this candle. This is the NFP, and the NFP killed any possibility because we drift lower and lower. And look at this move. This is huge. Not only in gold, we saw that. I mean, this pattern is, this candle is basically pretty huge. Let me just put this here because, I mean, we are holding the close, but copper, Dr. Copper, a leading indicator of strong economies, minus 4.63. It's similar to the blow off top of this app here at minus 5.6, but this is huge also, and it's closing at the lows. So the difference between copper and gold, it's basically that copper, leading indicator of economic strength, it's closing at the close, showing a lot of weakness, but gold, it's showing a little bit of buying down here. Because gold obviously is used by central banks to gather liquidity and reserves, but copper is just insanely weak. Silver, insanely weak, minus 5% in silver. I've not seen this in pretty long time. I would have to go back around here, not even that. What about this? -3%. This is May 2023. This is a move of -5%. This is crazy. Crazy. I have an indicator of a combined copper, silver against the equities. So you can see here copper, silver against the equities. That was down -15%. So equities were hit hard, but metals were hit really, really hard. This is honestly good for inflation because the price of all these metals are used throughout all the economy chain. But the equities is what I'm concerned about. How I'm going to tackle next week, it's really, really slowly. I would like to just, again, telling you, this is the point of control. I would like to see price above this point of control throughout all the week. I don't want to see price action going lower in here. And I'm going to clean this because I'm going to establish also one of my favorite support in the support setups, this daily fair value gap, it's also going to be key for me. And I'm going to include the 50% line because that's key for me. When this is hitting 18,887. So basically 18,900 needs to hold. I have also a 1 hour trend line, but I'm just going to close that. I was trying to find this pivot, this bounce on NFP, but the number was so bad that I'm really concerned about trading. I didn't trade on Friday, basically. So I'm adjusting the all-time highs. And if we never knew about NFP, this move higher and this consolidation, it's looking like a bull flag and bull setup. This still looks bullish. I just need to draw red lines on this. And my red line, it's basically the move on Wednesday. I would like to keep that as possible bounce. So we have here the 50% retracement, the golden pocket, and then we are converging with this fair value gap. This is what I was watching. So basically, as you can see, the daily midpoint, it's converging with the 50% of this fair value gap. So this fair value gap is in the 1 hour. And I'm just going to this zone. I would like to see a reaction in this zone. So it's basically here to here. Let's get rid of the midline and just point this as, I would say, yeah, this is, extend this to the right. Just bear with me a minute. And that's my setup. On the 1 hour, I'm going to see how the market reacts at this level. Because I'm not going to trade until I see a reason. And for a pullback, I would like to see continuation to the downside, rejection of last week low, last week high, and market most probably is going to go down on Monday. And let's see how the market reacts to this zone. This zone goes from 940 to 840. It's a 100-point zone, but I'm really interested in the 18,900. And to the upside, because you never know what the Nasdaq is going to do. Basically, I mean, all-time highs, or at least the previous all-time high, it's what I think is the NFP candle. I would like to use this, but we already balanced that candle, so I don't think that's good. And let me just put this up here. Yeah, it's just 10 points of that manipulation move was really a killer, right? So that's what's going to happen. We have also an inverse here, so that's also clue that we don't, I mean, markets are probably rejecting this zone right straight away on Monday. So that's the 1 hour time frame. On the 15% of the 15-minute, I need to see the overnight on Monday, but this is basically the setup. We have one case for this to reject and then start building. This is also a liquidity zone. Let me just have that. This is certainly liquidity to the downside. So with that liquidity, I mean, I think we are going to see this move and then this move, take this liquidity, and then let's see the reaction here. This is the bear case, or a pullback and buy longs sometime and next week. And for the strength move, I would really need to see pretty unbelievable strength to really trust this again. When we tapped up here and we rejected and trapped a lot of longs up here, I mean, I don't think if I don't think I will be trusting this kind of move next week. So most probable move would be to basically reject. I'm not going to short the market on this setup, even though you can do it. But I would like to see slowly building momentum to the downside towards this zone. And then try to see the reaction, see some kind of manipulation move lower to the golden pocket and then holding 18,900. And that's exactly what I'd be waiting for. And unless I see this, I probably don't going to trade a retest of all-time highs going long. That would be insanely risky. And that's my plan. And that's all from my side. As always, thank you for your time. If you found these weekly recaps useful, please give them a like, subscribe to the channel because I upload videos like this one every Saturday, recapping fundamental technical analysis, reviewing news and other markets to really assess what happened during the week, and most importantly, have analysis on the weekend to be prepared for next week's price action. Price action is key. You have to consider every scenario. And right now, fundamentals are pretty weak and I expect a pullback, but I'm still bullish long term. And I think there are some facts, some technicals, open interest on the S&Ps that are holding that case, but we have to really wait for price action to develop. I hope you had a good trading week. As I told you at the beginning, it's been a lot of volatility and it's quite difficult to trade these markets. And if you were red, don't worry. That's another day, another week. You have to leave to trade another day. And there will be plenty of opportunities next week because these markets are always offering opportunities to the patients, to the disciplined, and to the ones that manage the risk and leave to trade another day. So thank you everyone, stay safe, have a nice weekend, and see you on Monday.